Mm. All right, good morning, guys. Today is Tuesday, June 24th. Just waiting for market open. And we have about 30 seconds till market open. All right. So also I did some back testing a little bit for gold, but I don't want to start trading gold just as of yet. But I want to do some forward testing for gold. So for the EMAs right now, we have a big wick from the top for US 30. So I think US 30 might be, we have a big wick that's rejecting off of a 30-minute bearish low. But we are also above two bullish EMAs. Let me put an alert for gold here for the EMAs. I want to forward test gold going forward. We have the pre-market highs and lows. We are about to hit the pre-market low for gold. 304.4, 302.4. It might be a little hard following two instruments, so I um think eventually I might just stick back here to US 30. But anyway, so let's see what we have here. So we don't have any SAR entries, no EMA entries. Mm. Um, Gold is coming to the pre-market low. Again, I'm just forward testing gold and I'm not taking any trades on any of my accounts for gold. But I did some back testing and refining of the entries for gold yesterday. So for gold, the threshold is beforehand, the threshold was $1 away from an SAR, an EMA, or a pre-market high and low. That one was a little tricky because I ended up having a lot of break evens. So right now the threshold should be $2 away, unless maybe it's like a 15, I think a 15-minute SAR. Those are good for the $1. Um, but just generally just $2 away from any of these levels. And yeah, $2 away from any of those levels. And then you're going for a $4 TP, no, $4 stop loss and $8 TP, or a $3 stop loss and $6 TP. So all I did was double the previous thresholds, because before I think I was going for a $2 stop loss and $4 TP on gold. So a $4 stop loss and $8 TP, or you can get away with like a 3 to 6, so $3 um $3 stop loss and $6 TP. But again, I don't know how good I will be trying to keep track of both. So I mean US 30 has been good this whole year. So I was just curious about gold yesterday. So I spent a couple of hours just back testing and trying to refine the entries for it. So if I find it a bit too confusing to follow two instruments, but my main focus will be US 30. Um, but if I find it a little challenging to track two instruments at the same time, I'll just stick back to US 30 because that's what I'm profitable in. All right. So gold just past the pre-market low. It's almost at that 2 point entry. Again, I am not taking any gold trades. I'm just marking them up. Um, So the entry for gold would be there for the 10 point. Actually, this one is a $2 entry. So not taking any gold trades. This is just forward testing. All right. So the 10 point entry would be there. And of course there's also the 5 second entry. So but that's the pre-market low for gold. And in case if anything, all right, we might get a US 30 entry here based off of how US 30 is pushing. Mhm. Actually, if anything, these accounts that don't allow me to copy trade, let's see something. Mm. Mm, mm, mm. All right, so we don't have any EMAs close by where US 30 is. All right, so the gold one, with the $4 thing would have gotten stopped out. The 5 second one would still be running. Now the 5 second one, of course, would be a 1:2 risk to reward. Wait. Okay, so we have a 30-minute entry here for US 30. We just touched, we actually haven't touched it. So this would be 19.7. So the sell, the 10-point entry will be here. We've already touched the SAR level. So if we go to the 5 second time frame, I wouldn't want to see a crossover sell. So the 10-point entry is up here. So I don't want to see a red X before we get up here. If we see a red X, then I will go ahead and delete this. Mm. All right, so not yet. So gold again is sinking. So even let's see if no, this one would be this. So even the 1:1 risk to reward would have gotten stopped out for gold for this pre-market low. But anyway, so there's the US 30. So I am in the 10-point entry. So my entry for the 10-point is right there, waiting for the 5 second entry. So we need that crossover. So we need that red X in order for me to enter that. One thing I forgot to check here. Okay, yeah, we are in a supply zone. Okay. So I need the crossover cell. So I need the red X in order to enter the 5 second entry, which is what we use to track our official entries. Also, we have the pre-market high for US 30 up there, so we might keep pushing up to the pre-market high. All right, so we might get the 5 second entry somewhere here. Okay, so there's the red X. Not yet. Might be this candle. It's gonna be this candle. Yep, so I'm in the sell. So the 5 second entry, I'm in it as well. So let's see how this two go. $63.964.74. So be the pre-market entry. All right, there we go. All right, so almost depending on where you got in with the slippage, should be at full TP. We should get a spike down. Okay, full TP on the 5-second entry. My trailing stop is in profit. I'm still in the trade. Okay, I'm out. So full TP on the 5-second entry. I'm still in the 10-point entry. So we didn't trade on Thursday. We didn't trade on Friday. No live session yesterday. So far 0.75% for the day here. Uh, Let me see if the 10-point is gonna push. Mm, mm, mm. Should get a push to full TP for the 10-point as well. This entry was 43,016. So 43,016. So this is that entry that just hit TP. Let me see how rejection still. That's it's for my journal. All right, almost at full TP on my 10-point entry. There we go. Oh, my stop loss is in profit, 4,000. Oh, come on. Oh, I need a spike down. Oh, I'm out. Okay. So made like about 3,700 on the 10-point entry. So anytime, whenever I get to my profit points here, my stop loss starts trailing and it trails for about 3 points. So normally when I get to the 1:2 or even 1:1, my stop loss comes somewhere here. And that's why I normally want to get a big spike to the downside so that I can get way more profit. But anyway, that was a nice trade to start off the day. So all of my accounts are looking good. Let me just make sure it closed. Yep, 3,400 on that. Yep, yep. Yeah, all the accounts are closed, so that's good. And this one as well. This other account too. All right. So we don't have any active EMAs. Yep, that one also caught profit. We don't have any active EMAs. Um, I still think US 30 might come back down. One reason for that is during market open, we had this big big wick rejection to the upside, and it was rejecting off of a 30-minute and close to an hourly bearish order block. We just rejected on a 30-minute and a 15-minute order block. Now, if we close this candle here with this 2 weeks right here rejecting off of order blocks, and if this candle closes bearish, then US 30 will probably keep sinking to the downside. So, and as I said, like, I've been saying for the last couple of times, watch where the wicks are rejecting. If the wicks reject from an order block, and for me, I just subconsciously am able to see the wicks at the bottom. I really don't focus on the wicks at the top. But like if you see this, and this is why like that was a nice trade as well. If you see where price was going to, and you have an SAR on top of that, so you kind of have like two confluences lining up together. Actually, three, because we also did have a supply zone up there. So watch where the wicks are rejecting from. That's always going to tell you a story about where price is about to head to. Um, so price is coming back down. I do not see any untested EMA. We've already tested the 15-minute, the 30-minute, the hourly. Um, for the pre-market entries, for US 30, we are closer to the pre-market high than we are to the pre-market low. For gold, the pre-market low would have gotten stopped out, whether it was the $2 entry or the 5-second entry. Both of those would have gotten stopped out. Yeah, so we'll see. And for the SAR and EMA entries for gold, there's really nothing. I was watching this 4-hour EMA 2 on gold for a sell, but price is pretty far away from there. We had already tested this weekly EMA. So for gold, right, again, what would we expect if price gets to this 4-hour bullish order block? If we get here and have a bullish candle rejecting with a big wick to the bottom and a good body close, would expect gold to do this, right? So we want to watch what gold does once it reaches this area. So I'll add an alert here and see. And again, I'm not taking any gold trades, probably for a month. I just want to see how I can if I can manage to trade two instruments at the same time. Because right now we are trading three different strategies. So if I'm trading two instruments at the same time, then that's like six different things I would have to be looking at the same time. So um, if it gets too much, then I won't even be looking at gold. Two- 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 two. All right. So here are those two trades. So this is my 5-second entry account, full TP on that account. And this is my 10-point entry account, full TP as well. And this is what I was mentioning. So my stop loss trails up to, so that's why even though I'm going for a 1:1, technically if I just had a fixed stop at 1:1, the profit would be like 2,000. But because once I get to a 1:1, it trails like 3 points behind the 1:1. So that's why sometimes most of my profits for the 5-second account, you'll see 1,700, 1,500, or 1,800. Same thing with the 1:2 account, the 10-point entry account. If I just had a static 1:2, it should be 4,000. But the reason I'm not changing it to a static one is there are days when I'll get a big spike up in profit. So sometimes instead of locking in 4,000, I'll lock in 5,000. Instead of locking in 2,000, I'll lock in 2,500. So it's pretty much the same. So I just like keeping it at a trailing so as to uh maximize some big moves. And there goes the big drop for US 30. So again, like before market open, and once you start seeing this wicks, it really tells you the direction the market is going, right? If you see before market open, what did we have? We had all this week. So a bunch of wicks to the bottom, right? But if you look at where the bottom wicks were rejecting from, they were rejecting from bearish order blocks. So that's not what you want to see, right? And then before market open, you had this big wick to the upside and it rejected from a bearish order block. So yes, I would have expected US 30 to immediately drop from market open. But the other thing, what do you see? Price was above two EMAs. Price was above the hourly EMA. Price was above the 15-minute EMA. So if we were below more EMAs than we were above, maybe by then price would have dropped when market opened. But since we were above more EMAs than we were below, then the question is, where do they go to pick up liquidity, right? So we already know there was a pre-market high here, and we already know that there was this order blocks here. So when market opened, yes, it didn't get to the pre-market high, but it got to this bearish order blocks that are here, which is where we took the sell, and then price reversed back from there. Um, and here's the beauty with this rejection scalps, like, and I've mentioned this way back or a couple of times. You can write this for 100 points because look at where we entered the sell. Like personally, the sell was here. That's why I entered my sell, 42,027. So this rejection scalps, especially the SAR ones, you get like a higher, you get sells at the highs and buys at the lows. Because where we entered the sell here, if I can, let me see. Yep. Look at where those are where our cells were at the top there. So this rejection scalps, you can find ways to ride price further. So an option would be instead of going for 20-point stop loss, you go for 50, you go for 70 or something, and then you ride price further. But you need to literally know what the market is doing. You need to know what wicks are telling you. You need to know where the order blocks are. You need to know where the pre-market highs and lows are. And then once you do that, like it's easy to kind of tell the direction. Not every time, there are days that you get stopped out, definitely, but eventually like you'll have such a good win rate that it won't matter for the days that you're losing. Anyway, so we're coming down here. So down here, what do we see? We have a 15-minute bullish high and bullish low. So we have a high and low of the order block. This was one of the areas price came and picked up liquidity before market open, an hour before market open, to push price back to the upside. So we know that this should be a strongish area of demand. So if I do get so we don't have any EMA entries here. So if I do get a SAR somewhere down here, this would be a nice buy area for US 30. Or even you see this weekly bullish high. this one right here where we had this wick, wick from the bottom, reject from it, close as a bullish candle, same as this one. So if we get any buy, also we have closed below, let me see. Okay, so we've closed below the 15-minute EMA. However, you can see we don't have any supply zone here. So it's not a sell I would be taking from this area right here. But yeah, this area 42,780 to 42,845 is a good buy area for US 30. Gold, gold, gold. I'm still watching for gold at this area. What I want for gold to do is to come here, give a big wick rejection with a bullish candle. That's what I would want to see with gold. I just need to see a nice wick rejection in this order block. Goldie, Goldie. 68. Hmm. All right, we have a 15-minute SAR. Uh, this is a good entry. 855, 845.4. Oh, okay. I'm buying US 30. I'm in a buy um for the 15 minute, and I am waiting for so my 10-point entry is somewhere here. I'm waiting for the 5-second entry. Might be this one. But be careful because of that spike there. We might come back down. But I'm in the 10-point entry already, and I think it's at TP, or it's almost at TP. Okay, the green X, that's what I'm waiting for. Okay, not yet. Yep, so so this might be the 5-second entry here. Yep, it's gonna be this one. So I'm in the 5-second entry. It's a little tricky, but hopefully we get that continuation to the upside. And then I'm in this one somewhere here. So let's see if we can get another win. My 10-point entry is not yet at TP. I think I got filled in somewhere here. So let's see if we can push both entries. My trading view is frozen. Damn. Um, or the 5 second is frozen. I don't know about you guys, but my trade, okay, there it is. Almost at full TP for both trades. Yep, full TP. There we go. So another win. Uh, yeah, that happened so fast. Damn. Wow, what a day. Nice, 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 nice. Yeah, that rejection here happened so fast. There's probably maybe some news thing with all these war things that are coming in, but full TP, if you didn't get to catch the 10-point entry, then you caught the 5 second entry because at least that one we waited for it. Let me make sure that all my copied accounts closed because they have a habit. Nice. Okay. So another 0.75% win for today. So that's 1.5% for the day so far. This month is pretty good. 6% so far for this month for the live trades. And remember, so if you guys remember what I told you guys, this area right here, right? Where we have these order blocks. And I could tell your study was about to flush because if you guys, it happened so fast, but it was trying to break this hourly SAR entry. It was having a little bit of trouble. So because there were probably some pending buy orders or what, and also the wicks, right? If you and hopefully I don't get tired of talking about this. If you see this wicks, as much as yes, they were rejecting from an hourly bearish order block or whatnot. So anytime price is gonna get to an area where, and this was the third, no, one, two, three, four. This was the fourth time this area was being retested. So the third time a zone is retested, you expect some spike to that direction, either a spike and move back up to where price came from, or a spike and then it keeps going in that one single direction. So for example, if US 30 comes back down to this area, we are going to flash down to maybe this weekly SAR that's right here. So look at the wicks, train your eyes to look at the wicks subconsciously. That's what I did. Like I'm just able to see them even without looking for them. So I just normally look to my left and see, oh, do we have a bunch of wicks in that area? And then that's how I normally proceed. And also it's a 15-minute SAR. So remember, the 15-minute SAR that comes up after market open, it normally signifies price will reverse back to the other side. Now for today, I don't know if price will come back up. We are in an hourly bearish order block. Yes, we're in a demand zone, but this bearish order block, and you can see we are rejecting within it. Price came from up there, came from this order block, rejected from it, closed below this hourly bearish high. Look at where this current candle is rejecting from, right? Where we just pushed up to. So ask yourself, think about it this way. Why did price give that big spike to the downside, reject off of this bullish order block, off of this 15-minute and 30-minute SAR, go back here to this 30-minute bearish low, and now it's coming back down? Like, why is price doing that? So what that's supposed to tell you is that probably we might be pushing back down. So just ask yourself, why did price do what it just did right there for that buy we took? Why did price spike down heavily, create a 15-minute SAR rejection and push back up, right? So why did price do that? And then go back and reject off of an hourly bearish order block. So this is one of the 15-minute SARs that I don't think will push price back up. But anyway, so for us, it's just to, like, it doesn't matter what price does. If it wants to continue going down, I don't care. If it wants to continue going sideways, I don't care. If it wants to push up, I don't care. Because for me, I'm just looking for those three entries: SAR entry, EMA, or pre-market high and low. And I think for US 30, we are still far away from the pre-market high and low. And gold as well. So gold did not come to this bullish order block here. So it reversed back up. We are having some nice wicks on the bottom for gold. So gold maybe it did what it needed to do here. Maybe it was just manipulating past the pre-market low, and then it's like, okay, let me go back up now. So maybe gold won't be able to get back down there. Let's see. Okay. All my accounts are looking good. Nice. Um, Down is in profit. Okay. I just need one or two more trades to pass, like 3 accounts. That is this. Okay, so this time they did give me the full TP. H23 plus 2043. Okay, that is what it is. All right, and you can see price coming back down. So if we go back down there, so the next area we can probably buy is this weekly SAR that's right there. So that's probably the next area we can take an entry for US 30. Let's see. Or 4, 5, 6, 7, 8. So today I might be up like 40 or 50K for all of my accounts. Let's see. 16, 24, 6, 7, 8. I wish they could give a total. Anyway, let's see.
Bro, can I ask you about the trade,
About what?
about this trade that you just,
Mm-hmm.
yes, we said the, the hourly, so the three lines, that the three
Mm-hmm.
SAR. Yeah. So isn't that bearish? So
No,
how
I
can you
told you
take?
guys don't focus on whether it says buy or sell. Like your focus is it below price or above? And I'll probably take out those labels. So it's yes, it is bearish, but the way you interpret it as bearish, it means that if it closes below there, then you can wait for a retest and sell from it. But I said don't focus on whether it says buy or sell. Only focus whether it's above or below price.
Okay, so the wick. You said the candle, the wick. Where did it? What did it reject off of? Which how can I
So it rejected off of I think it was here, 15-minute bullish. It rejected over 15-minute bullish high. So here.
Oh, okay. And you know the three red lines.
Uh, huh?
You know the three red lines? What's
So
the
they're
three SAR?
SARs, right? So it's an hourly, it's a 15-minute and 30-minute.
Oh, so okay. So what happened here is basically um test the 15-minute bullish high, and then what you did is yeah. So what was it again that you did?
So when I saw the 30-minute, it happened so fast. That rarely happens, but the 15-minute was created when price was right above it, and then price spiked down. So I already know my threshold to get in is 10 points away. So I didn't have time to look like where my 10 points is, but by the time
Hmm.
this candle was down here, I could tell that that was already past the 10 points entry. Now, looking back, where's the 10-point entry? Looking back is the 10-point entry would be here. So this whole distance from the 10-point entry to, no, from the SAR, so wait, actually, 8:55. So the 10 point would have been at 8:45. So by the time when I was looking at it, this candle was already down here. So I already knew it was past the 10-point threshold. So that's why I went ahead and entered the trade without even coming back to measure. Because if I had taken those 1 or 2 seconds to measure, by then price would have been maybe somewhere above here, which the trade would have still hit. But with this scalps, time is everything. So entering 1 second late can mean the difference between TP and stop loss. But when I saw the 15-minute being printed, like beforehand, even before prices had gotten here, I already knew we had this order blocks. I already knew that we were in a demand zone. So when I saw that big spike to the downside, as much as I didn't have time to come back and measure where the 10 point is, I knew that it had already crossed the 10-point threshold. So that's when I went ahead and entered the trade.
Oh, on the 10 second, on the 10 second and the 5 second, it's all about the 10.
No, no, no. There's no 10-second entry. There's a 10-point entry. 10-point entry is where 10-point entry, you don't wait for confirmation. 5-second entry. 10-point entry is as simple as if you find an SAR, you can set a pending order 10 points away from it. Right? For me, I just choose to enter on market. For the 5-second entry, that's where you wait for the crossover. So you wait for the red X or green X. So there's a 10-point entry, there's no 10-second entry. There's a 10-point entry, and then there's the 5-second entry. The 5-second entry is pretty much just the 10-point entry, but you wait for a change of structure on the 5-second time frame. So all my trades have to meet the 10-point entry. They have to meet that 10-point threshold.
Okay, so and the entry is always on the like on the 5 second.
No. So 10 point, 10-point entry. Let me go to a new chart. 10-point entry. So let's assume this is a SAR, EMA, or whatnot. And then I'm looking to sell from this area. And then I measure my 10 points. So my 10 points is there. Just call it there. So with this one, I don't have to go to the 5-second time frame. I just need price to get there. So for me, it's only because I'm on the live session and I'm executing manually. So for me, when I set an alert here, if price gets up here, then I will literally enter on I don't have to go to the 5-second time frame. Now, when price gets there, whether I'm on the 5-second time frame, hourly or whatnot, and that alert goes off, I go ahead and hit my buy or sell. Okay, after this threshold has been met, after the 10-point threshold has been met, then I move down to the 5-second time frame and wait for a crossover buy or crossover sell, depending on which direction I'm trading, and that's it. So for the 10 point, you can set pending orders. Like, yeah, I for me, pending orders, but you have to be so quick about it. Like this one, you had to be so quick because when the 15-minute formed, like 5 seconds later, price push back down and push back up. So I don't think anybody has that first execution to set a pending order, 5 second, whatever. But even so for example, this weekly SAR here, since it has already been formed like way, way back. Now this one you have an opportunity to set a pending order now because this one you just have to look at where it is. It's at 797, 798. 10 points is 788.1. So this one, since it was already formed like way, way, way back, this one you can then set a pending order at 788.1, somewhere there, right? You can set a pending order and you can leave it and go do your thing. It's just a preference. So for me, I just prefer to do market open because I don't know when price will get here. Maybe by the time price will get here, this demand won't be there anymore or whatnot. So yeah. So for the 10.1, you can set a pending order. You don't have to be on any time frame. The only drawdown to that is there are some SARs that will be created literally when price is about to cross it. So for those ones, I don't know if anybody is fast enough to set pending orders for them.
Do you know that when you say the 10-second
No, there's no 10-second, 10 point.
okay, so oh oh okay, okay. I see. Um, so 5-second entry is on one account. A 10-point entry is the second.
Mm-hmm.
Oh, okay.
Right. The two trades for the day, the 5-second entry account, 3,400 for the day, two back-to-back wins. The 10-point entry, again, two back-to-back wins, 7,400 for the day. So just between these two accounts, about 10,000, no, actually, yeah, 10,000, $10,800 just for these two accounts there. And let's see. $12.94 573 plus 2036 10 plus 30, nope, 9, 39.98 plus 900 67.78. Why am I counting the wrong thing? 689 68.42 plus 24.64 74.24. All right, so for the day, I'm up 25,000 across all the accounts that I have, including the challenge accounts. Um, mm, US 30, US 30 rejection. All right. Okay, let's see. So we've closed above the 15-minute and 30-minute EMAs. If I turn on my zones, okay, so we have I wouldn't take the buys off of these EMAs because this EMAs are literally next to a 30-minute bearish order block. So I wouldn't, if we did not have those bearish order blocks here, I would have taken this, but it depends, right? So EMAs are moving. So but if price comes back down, this EMAs will be pushed down. So price will be next to this bearish order block. So I wouldn't even look about or think about taking those trades. So unless maybe up here we form another SAR, I wouldn't be looking to take this 15-minute EMA entries. And again, once again here, right? Remember what I said? This rejection scalps, you get to sell at the highs, you get to buy at the lows. Again, not all of them because there are days that you will get stopped out. But if you internalize all confluences, like you can find, for me, I normally go for what, 20 points, one for 20 points TP and the other one for 40 points TP. Right? You can find confluences to even give you like 100-point move because for somebody like me, 100-point move is 10,000 profit. So, you can find confluences where you're like, oh, wait, today I can ride price further. I just need to maybe adjust my stop loss a little bit more. Um, Give me a second here. I don't know if we're gonna get any other trades today, but in the meantime, dun, dun, dun. Let's report trade. Hmm.
Okay, bro, can I ask you about the indicator?
Mm-hmm.
Yeah, so like obviously you understand them like very well now, like the three of the strategies, like the rejection stuff. But like how I just told you about, the three, the 30 minute was the three, the three SAR lines. Remember? And then you were like
Mm-hmm.
you were gonna remove. So like there's certain things that are still a bit confusing. Like how you see the chart and you know exactly what to look at. Even if it does hit stop loss, it doesn't matter. But you know exactly like what to do. Even though last week you showed me, but the problem is like it's just certain things are a bit confusing. If you get what I'm trying to say, like how you said look at the zone, look at the 15-minute bullish low in this case or bullish high. But then remember you got those red lines as well. And then it's a bit confusing. You know what I'm trying to.
Wait, so I don't get, so what's confusing?
Okay, so just for example, if we just take today's, the last trade that we just took
Mm-hmm.
on US. Yes, the confusing part. So for example, we have the um, okay, so you got both entries, the 5 second and the 10 account. So um,
Well,
so
again, the 10-point entry, so forget about the 10 point. First of all, forget about the 10 point. The 10-point entry is only for me. Like for you guys, you should only be taking the 5-second entry. And I said this way back. Don't take the 10-point entry if you don't understand what it's about. Even for my own for the metrics that I share, that I record in the Google Sheet, it doesn't include the 10-point entry. So trying to do both, yes, it's going to be confusing. So you guys should, and I normally say this, I don't record the 10-point entry, whether they are wins or whether they are losses. I only record the 5-second entry. So you shouldn't, if at this point you're getting confused by both, forget about the 10-point entry just forget about it.
For now, the 5 second, yeah, I need to understand that properly. It's just that that it's not just that there's too many lines. It's just uh, it's like they're both uh, overlapping. If you get what I'm trying to say, there's one showing sell, and then one showing one bullish order block. If you get what I'm trying to say.
Yeah, but like, okay, well, I don't get what you're mentioning. So
Okay, yeah.
I talked about last week the confluences, right? So the three confluences, you wait for price to get to an SCR, which is why it shouldn't matter whether the label says buy or sell. Remember when I drew this and I said, don't think, like literally, don't think too much into it. Remember when I drew this figure right here? So if if something is above where price is at, you're looking for a sell. Forget about what the labels say. If price is no, if price is below an SAR, below an EMA, below a pre-market high, you're looking for a sell. If price is above an SAR and EMA, you're looking for, I mean, similar to, okay, if I draw this, if I, and let me just give an example, and the colors shouldn't even matter, but if I draw this and ask you, if I draw this and I change and I do this, if I ask you, which is a resistance zone and which is a supply zone? So to you, between this one that I've highlighted here, and I'll call it zone A and zone B, so which one is support?
But
Huh?
as in the
How are they both support? So I've already drawn you, this is where price is at. So which one is support and which one is resistance?
I mean the bot.
The bottom one, right? The bottom one is support and the top one is
Yeah.
resistance, right? So regardless of however I've shaded it, there are people who color this blue, there are people who color resistance blue, there are people who color support white or red or green
Oh,
or orange, right? So the color at first, the color definitely doesn't matter, right? So that's just how I've coded the indicator. So the color doesn't matter. What matters is relative to where price is at. Where is your SAR? Where is your EMA? If price is above an SAR, you're looking to buy at the S. If price is above an SAR, yep. If price is above an SAR, meaning price is somewhere here. When price gets to that SAR, EMA, pre-market low, then you're looking to buy from there. If price is below, if price is below an SAR, an EMA or pre-market high, when price gets to that EMA, SAR or pre-market high, you're looking to sell from there. That is it. Right?
so so in the trade, like in the example that we just
Mm-hmm.
you just took. So if you see what I'm trying to say is yes, you see. So this is what I'm trying to say, which is a bit confusing. So we got the 15-minute bullish low and bullish high, and then right
Mm-hmm.
next to it, hourly sell, 15 minutes sell, and 30 minutes.
Well,
That's
first
what
of all, forget about the hourly because we had already retested that. So we weren't trading the hourly today because the hourly was already retested at 8:30. So today it's only the 15-minute and 30-minute. Uh-huh.
okay. And that's what would you look at it? It's just a bit. Oh, so
So only thing I'm looking at is where, okay. So where was price when price was getting to this 15-minute and to the 30-minute? Was price below this SARs or was it above them?
uh, uh, was above.
It was above, right? So it was above coming down. So if something is going down, then you expect if price is going down, unless you have confluences for, and again, remember, the rejection scalp is a counter trend. You're not trading with a trend, right? So when these SARs are formed, it's showing that, hey, this is an area where in future I may sell from because it's price. These SARs are created based off of the momentum of the trend.
Mm,
Right? So it's saying that the trend is bearish, the trend is bullish, whatever. But it's telling you what SARs are telling you is that if I form an SAR and I close below it, I'll probably retest it and then go back in that direction. That is the whole premise of an SAR. But the other thing the SAR is also telling you is that when I form these areas, it is also possible because again, this is if you guys remember when we were trading the SAR levels rejection, we used to wait for the first candle to either close above or below an SAR. For the rejection scalp, we do not wait for the candle to close, right? So the only way to know whether price will continue being bearish or reverse back up and be bullish is to wait for a candle closure when price reaches those SARs. Are we together?
mm,
But for the rejection scalp, since we're scalping, we don't want to wait for a candle to close because a lot of that level, remember, rejection scalps, you need a lot of liquidity for price. You need to be in and out of that trade in 30 seconds to a minute or two. So you don't have the luxury to wait. So your anticipation is that when this SAR, again, for me, this is why I say like you guys can develop your own strategies with these indicators. This is just my own. I'm not saying like this is the only way. There's probably tens of other strategies you can develop with them. I never had a good win rate with the break and continuation strategy. I've never if we go here and I go to this account that I've been trading since 2023 and I filter based off of trend line and SAR break, so anything that says break here, rejection and breakout, SAR levels break. Let's see. I think it's just that. My win rate is terrible. Out of all of those 6,000 loss, 15 losses, 8 wins. And you can see like the SAR levels break, like about break even. Trendline plus SAR break 1,700. Rejection plus breakout 4,000 in loss. I've never been good at doing breakouts. Now, not to say that it doesn't work. It does work, but this is only how I do it. So for me, instead of trading breaks, I trade rejections. So
mm,
for me, when price gets to an SAR, I'm not looking to trade a break. I'm looking to trade a rejection.
mm,
So if I'm looking to trade a rejection and rejections are counter trends, that is a very risky trading strategy, especially if you don't know what you're doing. So that's why I have those three confluences. So I know, trading rejections is risky, but then I'm like, how can I make trading rejections less risky? So I have those three confluences that are those three confluences. I just wait for um, the rejection to happen. I make sure price is about to reject off of an SAR, EMA, or pre-market level. That's my trigger to even think of taking a trade. The next step is if I'm buying, I make sure I'm in a demand zone. If I'm selling, I make sure I'm in a. Actually, I should change this, to reference for the colors. So if buying, make sure you're in a demand zone. And if you're selling, make sure you are in a supply zone. Um, Save as confluences, right? And then the very last one is if you're buying, make sure there are no bearish order blocks around your entry. If you're selling, make sure there are no bullish order blocks around your entry. So that is all you need. Like literally, these three confluences and this markup that are drawn up here. This is all you need. So
Mm.
forget about the 10-point entry. The 10-point entry is only mine. The only way I track the 10-point entry is in my journal and associated accounts. So and if you take, anytime I say I'm taking the 5-second entry, this is what I track here. So this is what last month was 6%, this month is 6%. So if you find the 10-point entry confusing, forget about the 10-point entry. If you find the 5-second entry confusing, forget about the 5-second entry. So if you prefer the 10-point entry to the 5-second entry, every time I'm about to enter the 10-point entry, I literally say I'm taking the 10-point entry, right? So if you find both of them are confusing to you, choose one. Choose the 5 second. Like every time I'll mark up both entries. There's no time I'll mark up only one and leave the other. So if you find both of them are confusing, my recommendation, start with the 5-second one. The 5-second one is definitely safer. The 5-second one, you go for a 1:1 risk to reward. So, and that hits almost instantaneously, whether stop loss or TP. The 10-point threshold entry, you go for a 1:2 risk to reward. So for the 10-point, most of the times you will be in the trade longer than the 5-second entry. So if you're finding both of them confusing, forget about the 10-point, start with the 5-second one and you'll understand it. So that's my recommendation, and you'll still make money off of it.
Mm.
Yeah. So
I think
all you need is literally this drawing that I have up here and these three confluences, and that's it. And again, same thing. If you find the EMA confusing, if you find the pre-market confusing, so if you find all three confusing, take out the EMA entry. Don't take EMA trades when I take them. Don't take the pre-market trades when I take them. Only take the SARs. So that's how you're gonna learn. So don't try and do all three at the same time, because again, if you think of the statistics of this, you have three, and now I'm about to start analyzing gold. So you have three setups. You have the SAR, EMA, pre-market. Okay. Then you have three separate confluences, or you have three confluences for each. So I think it's 3 to the power of 9 or something. So it's 9 different things you need to think about. And then I don't really do time frames, so there's nothing else. And then now if I start analyzing gold, so it's 9 different confluences on one instrument. And then if I start analyzing gold, I think again it's 9 to the power of 3. So 27 different things you have to make a decision on in a split second. So if any of these are confusing you, maybe start just by taking SAR entries on the 5-second time frame, and that's it.
yeah, you're right. Yeah, I think I need to just I think is better to do is, what, like every trade you take, I think maybe like at the end or whatever, like there should be like I'll just like ask for like a breakdown and then I'll just journal and
Mhm.
yeah, I think I
Yeah,
won't
that
take
works.
yeah because if I had taken, let's just say, of course, like if I don't really understand it fully, it doesn't make sense. Like
Mhm.
every time you take the trade and then I'll ask for like a breakdown and then I'll just journal every.
Yep. Yeah. Yep.
Like
And that makes sense.
I
Yep.
think
That actually. Yep. That actually makes sense.
yeah because uh, what's it called? Because like it wouldn't make sense if I'm just like, let's just say you take it and I just follow and then it's just just copying, but I don't even understand it. It's not,
Hmm. Yeah. Yeah.
so
No, I agree. I agree. That's
yeah,
yep. Yep. You're right.
yeah,
You are
that,
very right.
that- so I think that's what has to be done.
Yeah. And definitely, like what you just mentioned, like journaling there, it really helps you. It really, like after a couple of times, you'll definitely be grasping it. So yeah, that makes
Mm,
sense. Yep. Yep. Yep.
mm, mm.
24. So this was the 30-minute. 42. Um, didn't take a screen grab of this one. So this entry was at 42,866. 42,66.
And then once you're done, the other thing I want to ask is like, like how we have the conferences and everything went to. What's like the red flag, like the flaws, like what you shouldn't do, like what you should take, like when they trade, even if it lines up, like what should you avoid? Like one of the examples was there was like this, I think there was a EMA, yeah, it was a EMA buy, and then there was a supply zone. So like like certain the entries that we have, like the three of them are having, and then what are like the flaws, that you should look.
Okay, gotcha. All right, so to answer, okay, so for that question, what we'll do. Why is this thing so big? All right, so to answer your question, okay, the red flags. So the red flag so if you want to do the red flags, just think of the three confluences to find your red flags. So of course, confluences, okay, so the first one, there's no even red flag because you have to find a rejection off of it. The only thing that I'll say a red flag of confluence one here is, remember, the 10-point threshold is the trigger for me to take any trade. So let's assume here, and again, this is just assuming, but let's assume that we had an SAR level here. No, actually here. Yeah, here. Let's assume we had an SAR level here. Where's the 10-point entry? The 10-point threshold would be 996. So this would be 0, 0, 6. So 10 points, let's say it's just somewhere there. So this is where, okay, and then I'll just label this SAR, EMA, or pre-market high. And then up here is where the 10-point is. So let's assume, and again, this is not what was happening. This is just like a markup. Okay. So if price gets to your SAR, EMA, or pre-market high, and if the only reason I'm putting a pre-market high here is because price was below, so we would be looking to sell. For a buy, it would be SAR, EMA, or pre-market low, and the level would be below. So if price gets to your level, whatever level it is, and then taps it and rejects from it immediately without getting to your 10-point threshold and forms this crossover sell for a sell. So forms a red X for a sell or forms a green X for a buy if it was the reverse. Then at this point, you go ahead and delete that. You go ahead and forget about that trade. So you're not going to get into the 10-point trade. You're not going to get into the 5-second trade because the anticipation of all my trade setups is that price gets to the 10-point first, to the 10-point threshold first before rejecting, because our goal is that we are trying to catch a rejection off of an SAR, off of an EMA, off of a pre-market level. So if the rejection happens before the 10-point threshold, you forget about that trade. Does that make sense?
So that's for all of the entries.
For all of them, yep. All of my entries, the trigger is the 10-point threshold for US 30. For gold,
Okay.
yeah, for gold is wish-washy. But for US 30, it's 10 points. So the price has to always get to the 10-point first before making any rejection.
So on the 5-second or the 10, it has to always go to the 10. first.
Correct. Yep. Mm-hmm.
Okay, okay. Just yeah, this is another thing I'll have to journal like afterwards when I watch the video again. I'll replay. The thing is, the difference between the 5 second and the 10 point, so then I can see which one's easier to like learn first.
Mm-hmm.
Yeah, so the 5 second entry and then the 10 point, what would be the difference? And then
There's
I'll
no
see which one.
difference. Oh, yeah, like what is yeah, so the difference is the 10 point you're literally entering at the 10 point. The 5 second, your entry for the 5 second depends upon when you see a green X or red X or change of structure. Think of it. For me, I just used whatever my indicator has, which is the red X's and green X's. You
Oh,
can find something else, but for the 5 second, think of it this way. Once the 10 point has been achieved, find a change of structure on the 5 second time frame. So whatever you want to use.
okay. So on the 5 second, we wait for the 10, and then we
Mhm.
wait. The change of structure. What's that? Like,
So I just call it a crossover buy and crossover sell.
oh, okay. So on the 5 second, is that crossover? Is there X? So the green or the red
Yep,
X?
correct.
Also, so that's the change of structure. That's what you mean by the change of structure, right?
Yep, yep,
Oh,
yep,
and then like today, like right now, there was two examples. Like one of them, the X nearly formed, but then it didn't, and then you didn't take it, and then the next candle, the 5 second, on the 5 second time frame, it formed, and then you set it and
mm-hmm,
you took it, and then
mm-hmm.
on the 10, the difference is as soon as it hits the 10 threshold, you just enter. You don't wait
Yep,
for no.
nope,
Is that the
yep, correct. Which is why
uh,
for the 10 point you go for a 1:2 because you're entering on impulse, right? Because there are days
oh,
I'll enter the 10 point and price is going to continue going in my stop loss and hit my stop loss, right? So in order for the 10 point entry, like if you look here for the 10 point entry, my win rate is lower. But because I'm going for a 1:2, you can see my win rate is 46%, right? For the SAR, EMA, and pre-market, win rate is 46. But if I go to the 5 second entry and filter out just to those three strategies, you'll see the win rate is about 70%. So if we do that,
wow? Is it?
um,
Oh, do you think
and
it's just
do
because?
those three, the win rate is 65%, right? Because I'm going for a 1:1.
Okay,
So
ah,
with the 10 point threshold entry, you want to go for a higher multiple R's to cover the day's price will immediately go to your stop loss. Not to say that even the 5 second entry, their day's price is going to go immediately in my stop loss, but at least for the 5 second entry, I'm waiting for a change of structure. You know what I mean? So I'm waiting for an additional confirmation before entering.
oh, I see. But the thing is this: that the 10 second. On the sorry, not 10 second. Why do I keep saying 10 second? It's the 10 point. So is basically I just keep making that mistake of saying 10 second. The 5 second time frame. They're both entries are the same. The only difference is
Correct.
one of them just has a green or red X, basically.
Correct.
Okay, so now I see. And one of them you enter on impulse as soon as it hits the 10.
Correct. Yep.
Okay, okay, yeah, I understand. The problem is, it's not problem. You know how you said the 10, uh, uh like the impulse or entry. That
Mm-hmm.
one, if it has it still has a high win rate, but if it has a lower win rate compared to 5 second entry, uh, uh, what's it called? Uh, does it make sense to just stick to the one with the green and red X, do you think? Or like,
And
you
it,
still
it depends, right? So it's not, and again, it's okay. Win rate is relative. So if I have a win rate is also dependent upon your risk to reward. So for my 10 point, I'm risking 1% to make 2%. For my 5 second entry, I'm risking 1% to make 1%,
okay? That makes true sense.
right? So it depends also on your risk to reward. So if for the 10 point, I was going for a 1:1 risk to reward, I think the win rate, I don't know how win rate is calculated. Um, I I no, the win rate would be the same. The win rate, the win rate would be the same or just a little better, but my profits would be lower. Right? Because if you look at here, for this is the 10.10, no, 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 no. The 5 second entry since the beginning of this year, I've made 95,000. No, the 5 second entry, $95,000. So, and this is actually not beginning of this year. I started trading this end of February. So, March, April, May, June. In about 4 months, I've made $95,000 on the 5 second entry alone. Um, if we go to the 10 point entry, the 10 point entry started off, uh, I think I started in, let me see, 10 point entry, I only started mid-May. So in actually 1 month, 1 month, 1 month, 1 week, I've made 50,000. So if in 1 month I'm making 50,000 on the 10 point entry, that is in on the 10 point entry, and I just scaled that to the 4 months where I made 95,000 on the 5 second entry, is to mean that in 4 months, if I keep doing what I'm doing, the 10 point entry in 4 months will give me about 200K, or call it 150K, just to be a bit lower. So in 4 months, the 10 point entry will give me about 1.5 times more than what the 5 second entry is giving me, which kind of makes sense because one of them is you're going for a 1:1, the other one is going for a 1:2. So on
That's true.
average, on average, a month, I think the 5 second entry gives me, I, let's see. So this is June. I don't know. I don't even know how I can do this. But on 1 month, on average, I'll call it 40,000. And then on the 5 second entry on in 1 month, the average may be somewhere close. Wait. There is a wait. There is a fifth. Okay, there is a 15-minute SAR here. Let's see if we can get another entry. So 10 points again, 20, so 30.1. So if price gets here, I will take a sell on US 30. Uh, And I think we have another buy. Okay, so we have a 30-minute buy above there as well. So we have two SARs here. So anytime you have two levels in the same area, it's probably best to go for the higher one. So 2:30. So I'll take the 30-minute one, which is, wait, what time is it? Oh, wait, it's past 11. My bad, guys. Yeah, I don't trade past 11. Um, we do have good sell opportunity up there, but it's already past 11. I don't take, that's my cutoff for trading the morning session. But to finish 20.3, yeah, it didn't get there. So look at this. So, and this is the perfect example what I was trying to show you. So this is actually the perfect example. The 15, and you're watching this, right? 43,020. So the blue line is where the 15-minute SAR was formed. So this is where our SAR was formed. My 10 point is right there at 43,030.6. Right? Are we together up until there? Hopefully that makes sense. Now, my anticipation is that before so when price hits this, our SAR there, I don't want it to reject immediately. Even though it rejects immediately, I don't want it to form a red X. I want price to get to the 10 point first, tag me in, and then now I write price down. But because for this particular setup here, give me a second. Because for this particular setup here, price did not reach the 10-point threshold first. It reached like 8 points and then reversed back down and created this red X already. So the red X is my cue that, oh man, don't wait for this anymore. So at this point, you know what I do? I delete my alert here because I'm not looking to ride this rejection anymore. And then at that point, I wait for the next setup. And guess what? We have a 30-minute SAR that has formed right above there. So maybe for the 30 minutes, then I can label it because it hasn't been tested. I wait for 10 points above and I do the same thing over again, if that makes sense. So
Okay.
that was a live example of why I would not take this 15-minute SAR rejection. So hopefully
Okay.
that makes sense.
Two things about it is, for it to be invalidated, if it doesn't go to the 10 point first, and then if it goes, so, from the essay, if it goes up, and for example, in this case, it only went 8 points up, and then
Mhm.
if it goes down, if it goes 10 points down, did you say from the essay, it becomes invalid in this case?
It depends. It depends. It depends. It depends on what you're using for the change of structure. That's that, again, that's not how I do it. It doesn't mean that that wouldn't work. For me, my invalidation comes from what my indicator is telling me. So
So,
but you have to backtest. Again, you have to backtest and forward test and see if that will give you a good win rate.
mm, so the way you did it right now, you said 8 points, it went up, and then of course it didn't reach the 10 points, and then it went down 10 points to the downside. So then you'd cut it.
Hmm.
So once the trade goes 10 points into the other direction of your trading, that's it. It's invalidated because it's already done the
No, I,
mistake.
I didn't say 10. So for me, what will kick me out of the trade is the crossover. So the red or green X after
Oh,
the SAR has been tested. So if the red or green X comes before the 10 point, I'm done. If my 10 point comes, so my anticipation is that my 10 point will come after. No, my anticipation is that the 10 point will come first after the SAR has been tested. So the question is always, once an SAR or EMA or pre-market high or low has been tested, what will come first? You want your 10-point threshold to come first before the red or green X. If the red or green X comes between the SAR and your 10 point, then you go ahead and delete. That trade has been invalidated.
okay. The other thing is this, let's say, for example, we're waiting for price to hit one of the three entry, like whether it's the SAR, EMA, or the pre-market high. So let's
Mhm.
just say before price test, the green or red X already shows up on the way to price hit one of those levels. Is again, it would it be invalidated?
Before price test one of those levels?
Yeah.
No, like again, remember the confluence. What's confluence number one? Rejection off of an SAR, EMA, or pre-market level.
Okay.
Like those levels have to be touched, which is why I drew two things here. I drew like normally I go to the 5 second time frame once I see that the level here has been tested. Because here on the 5 second time frame, yeah, I mean this indicator that has the SAR still can draw the levels on the 5 second, but I tested it out and sometimes it misses some of them. So as soon as I see that that level has been tested on whatever time frame that I'm on, then I move to the 5 second time frame and then wait for that 10 point to be tested.
Okay. Okay. I see what exactly it means. Once in this case, because you've always using the 15 minutes, so to use as the default, as soon as price tests it, regardless of whether the candle closed above or below, or is the wick just whatever happens, the candle or the wick has to just test. Then you have to go on the 5 second and then look for price to move 10 points in the direction you're trading. Um, no, no, no.
Yeah.
Price has, and then you need to look for the crossover.
Yep. And that's it.
So, uh, okay. The last thing is once it on the 5 second, once price goes 10 points up, and then once it goes 10 points up, it has to come back 10 points down.
Uh-uh. What do you
No,
mean?
so it just has
So
to,
once it's gone 10 points, you enter your 10-point entry, and then for the 5-second entry, you wait for the crossover. Like that's it. So you're done. As soon as the 10 point, you only think of it once. You don't think of it again. So the 10 point, so long as the
as soon
10 point has been triggered, the only other thing you're waiting for is your red X or green X. You're not waiting for any other points.
yeah, this is the only part that was just a bit confusing. The 10 point is fine. As soon as it hits the 10 threshold, you just
Mhm.
end. But with the 5 second, once it hits the 10, all you do now is you wait. For example, if we're bearish and we look for this, you'd look for price to go 10 points up. And then once it goes down, you just have to, for as long as, as, as the green or red, for as long as the green red X shows up.
Yep.
Yeah. But the other thing is this, let's say for example we're bearish and then price goes up, goes to the 10, and then it comes all the way back down, but it's gone 10 points past the SAR, for example. You see what I'm trying to say?
But I can't answer that question because I don't know. That's not how I trade. So that one you would have to then back test or forward test because you're talking about something I don't do.
Okay, so what I'm trying to say is basically um as soon as price goes and hits the 10 and comes down, how long should we for the red X to show up, for example,
It
before it
dep-
becomes
it,
illegal?
it doesn't it well there's no time frame. It depends on price movement, right? If you have a ranging market, it's gonna take, I mean, that's relative. It doesn't, I don't know. I mean, yeah, I don't know. For me, I just wait for it to show up here. So there's no specific price point or there's no specific timeline that says, oh, after 5 seconds or after 10 seconds, then the red X will show, the green X will show. Nope. It depends on price action. So sometimes it might take a minute, it might take 1 second, it might take 5 seconds. Yeah, it depends on a lot of things.
Okay, and then as soon as it shows up, you would just target um uh, is it a one-to-one?
Yeah, for the 5 second entry, I go for a 1:1. Again, that is what I've found works for me. And all of this, so let me reiterate this and make this clear. Everything that I've done, it takes me at the very least 24 hours to backtest each and every strategy. Literally each and every strategy. It doesn't mean that everything that I say is the holy grail. It doesn't mean that that's the only way to use my strategies. But yes, so everything that I'm answering for you is the result of what I've backtested. Yes, for the 5 second, I go for a 1:1. For the 10 point, I go for a 1:2. It doesn't mean that that's the only way you can do it. But yes, for the 5 second, I go for a 1:1. For the 10 point, I go for a 1:2.
The only reason why I keep asking that is because like you've already proven it, like it works. That's why. If I go in and I just do my own thing, then it's just
Yeah, yeah. So
not
I
gonna
do,
be
yep.
good.
So I go for 1:2 on the 10 point, and then I go for 1:1 on the 5 second.
Mhm. Yeah, like the 10 point entry, it makes perfect sense because it's simple because you're just entering on impulse. As soon as it hits the 10 point, you enter. But the 5 second, the only reason why it's a bit confusing still is because after it hits the 10, when you're looking for X, right, imagine like in the mind, the way I'm seeing it is how if the X shows up, uh, yeah. What I mean is this, this is the last price goes and hits the 10 and comes back and hits your one-to-one with showing that red X. You see what I'm trying to?
Mhm.
Yeah, that's what I mean. And then that means that trade is already gone. That means we can't enter it because it's already hit the TP without showing us the X.
Uh, right. Again, I can only talk about how I trade. I see what you mean.
Okay, I'll just follow
Yeah.
what you said. So what was you said again?
No, I mean, I'm trying to understand what you're saying. So Anyway, let me ask you this question. Which one, and I'll give you the answer I gave you last week. Which one do you find it easier after we've talked all of this?
Uh, I would say, the 10 point, it actually sounds easier because you just literally, as soon as it
Okay.
hits the 10, you just
Good.
enter.
So if that's what sounds easier, get a demo account, take those trades with me, and then let's analyze them together. Because like definitely for me, number one, I don't like dealing with hypotheticals. Like for me, I like seeing results. So get a demo
Mm,
account with me, take the 10-point entry with me, and let's analyze those trades together because I cannot, I get frustrated when I try talking about hypotheticals because like literally for me the way I work, I have to forward test something. So I have to forward test something and ask myself, why is this working? Why is this not working? That is unfortunately for me how I'm able to process things. So for all this, if after what I've talked about, you find that the 10 point is easier, please get a demo account, trade
mm,
with me. Let us analyze each and every 10-point entry before and after we take it.
mm. The 5 second is not difficult. It's just that one
No,
thing
no,
that I'm
no.
just
So
thinking.
choose one or the other. Don't do both. So choose one or the other. Take a demo account, and then let's ask those questions once we have some actual executions from you.
Mm. Let's just say, which one is more? I don't know. We'll just choose whichever
And it
one.
doesn't matter. Like, what's the alternative? The alternative is waiting and just going back and forth. No. So I don't care whether you lose in the demo account. That's the only way I can be able to help you. And I've done this too with some other, close friends of mine. It's like, you know, they literally did what I've been teaching every single thing. And the last time we met, they were like, oh, I asked them, what trades did you take? And funny enough, the same trades they took are literally the same trades I took. So for me, that's the only way I can be able to help you get this is get a demo account. I don't care whether you're losing or winning. Show me your trades. If you're winning, perfect. And then you'll get to a point where, you get to a point where you're like, oh, wait, I'm taking the same trades as you. I'm seeing the same things as you're seeing on the chart, right?
Yeah, that's right. That's true.
And you can
Yeah.
see like here, the 30-minute, and they come back to back. This one, if it was before 11, and I have to drop off, but if it was before 11, this was another trade right here. The SAR was at 32. So SAR was at 32. So SAR was here, 32. Somewhere there. The 10-point entry would have been at 42. So this one actually didn't get to the 10 point. So another example of an invalidated trade, right? So this
Mm,
one, we have an SAR here. Price touched it, didn't get to the 10 point again, got like to 9 points or 8 points, came back down. So which came first? Did the 10 point come first? No. The red X came first. So at this point, I go ahead and delete that trade setup. So that's another example, like literally live right now in the markets. But until you can be able to now take these things in your own accounts and then we see the results, um, I can only
yeah,
do so much.
yeah. That's the only way to learn. I, c- I just have to get the demo, and what I'm gonna do is every time you just take the trip, I will take on the demo, and then like right at the end, maybe not every day because certain days you might be busy or whatever, but the day
Mhm.
where maybe sometimes even at the end of the week we could do the review or something like that, or maybe the
Mhm.
next week we could just go over. I think that's the only
Yep.
only if you have time though. If you haven't got time, you
No,
just have to
I
wait
mean,
for
for me,
another.
all I care is like effort. So if you have effort, like I'll always make time. Like if you can actually show that you're willing to learn and you're actually executing trades, then time is always there. You can always find time.
Mm,
Yeah.
true, but
But anyway, I have to drop off, guys. I'll see you guys. Let me see if we'll have a session to. Yeah, so we should have a session for the rest of the week if nothing else comes up. But anyway, I'll talk to you guys later. See. Yep, so that should be it. All right, guys. Peace.